So let's talk about what's really going on out here. We had COVID lows, right? We had COVID lows here. We had this big rally up from COVID lows around 154 on the triple Qs, all the way up to 400s. Then we had beginning of this year, January 2022, we had a bear market all the way down. Market started turning around in the hopes of anticipation of a Fed pause, and they got it. The market started taking off. Then the market did a little bit of pullback here, right? We got Nvidia, AI stuff, and then we got the Fed rate cuts, which shot this whole market all the way up here to 544s. So in the course from 2020 to this year, the market is up over 229% on the triple Q. That is a massive increase. If you bought down here at the COVID lows, which a lot of people did, they started getting back in investment. You've done fairly well. Now you have a lot of individuals very upset. We've all had about a 20% pullback in the market from all-time highs. This is a monthly chart. 25% now pullback. In 3 weeks, well, in 3 months, you had a 25% pullback in the market. So where are we going from here? Right, I know people are worried about the 401ks, TSPs, investments, all that kind of stuff. Everything's quiet. Everybody's quiet everywhere when it comes to trading investments. People coming to me directly saying, "Oh my God, I lost so much money. All my investments are down." People are like, "What am I going to do?" And then everybody thinking at the same time, "Oh, the market's going to bounce back up." I wouldn't think that way right now. You have a perfect storm that's kind of been lit up, and even Tom Lee capitulated and said he was wrong about tariffs and he's sorry and this and that, because everybody wants to be a bull. I get it because that's what everybody's been trained to do. Invest, buy the dip. When it goes down, buy more. It's so low, it's got to go back up. Now we're going to talk about the fact that you are at a key level position here. This was the run up, and this was the pivot this was the bear market that kicked in 2022 that started it towards the end. And then, this is when 2023 kicked in and everything turned around. Right. Fed rate pause, Fed rate cuts. The bond market did not believe any of this in the Fed rate cuts because the yields started rising they were going up with the market at that time. And that's a sign that the bond market didn't believe in these rate cuts, or maybe they didn't feel like the rate cut should have happened at this time. Then you get over here, and you get this big sell-off so fast, and everybody's freaking out, right? In 3 months, you've wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, a year's worth of gains in 3 months. You're at a key support level. This is a very strong support area. Why is this a strong support area? Well, again, just said it. This is a strong support area. Right, but anyway, because this is where it pivots. Support and resistance are always on pivots. You get into more courses up today to talk about that. But pivot here. We had consolidation and rejection to break above, and we finally broke above. We came down to it, retested this level before back here on April 24th, and we ran up ever since, right? We had a little bit that close here, and now we came into this area and we bounced, right? If I pull after hours out, you're trading down after hours. If you break this level, which is what I want to talk about, I'm not going to talk long. If you break this key support level here, if this drops below 390s, 395, I'll say 390s, you're talking about another drop down to where the Fed first start cutting rates around 336 on the market. So overall, I'm just trying to help y'all out a little bit. If this drops down to this level, you're talking about a total of 36% drop since all-time highs. And if this doesn't hold, you're coming down probably to this Fed pause area down 274s, which will bring you to my area of where I think the market is going. Listen, that's just me. It's my opinion. based on my analysis, that's where we're going. We're going right back to where the Fed paused rates because the market didn't believe it. As far as the bond market, I think that's where we're going. I think that I've been talking about a 50% drop in the market with everything going on. And unless there's some capitulation on some side with these tariffs, this is probably where you're going to end up going, if not lower. But that's what I'm predicting. Hey, I'm SixFourTrading. I'm just trying to give you guys an insight. You know, you can take it, you know, to say I'm crazy, but so far I've been right about this sell-off and about, you know, most of the market coming back down. And this key level, you better watch this zone around 409 on the triple Qs. If 409 breaks down, you may have a hard time. It may get a lot lower for you guys. SixFourTrading. Thanks for listening. Like, subscribe. I'll talk to you guys later. Bye.